Yeah, good morning, everyone. Welcome to another week of trading. I hope you guys had a wonderful weekend, a wonderful, relaxing weekend. But what we're going to do, we're going to look at these charts. We're going to see if we can identify some high probability setups in the market. And yeah, good morning, Tommy. Thank you for coming. We definitely have to catch up. Hope all is well with you. And Adam, good morning to you as well. But with that said, I guess we can move forward and start looking at these charts to see if we can identify some setups in the market. So then the first pair that we're going to look at right now is the euro yen. And we're currently looking at the 1 hour chart. And, it's pretty obvious where price is headed. We don't have to really go into all the basics. I believe most of us know the directionality of this pair from this particular time frame. What we can see is that we're currently bullish on euro yen. It's pretty obvious. Price is making higher highs, higher lows. I mean, if you draw in your waves, you can easily see we're making higher highs, higher low, higher high, higher low. Well, this is an equal high right here. But from here, we see price keep climbing up, and it makes another higher high. So we're definitely in a bullish environment on the 1 hour chart. And what we want to do is look for an opportunity to buy. Now, let me say this up front. If you're a scalper, there are opportunities to buy right around here, especially if the correction is beginning right around here. But usually I don't like to scalp a counter trend scalp unless it's hitting some level of structural resistance. I would have to see that before I decide to trade in that manner and look for a shorting opportunity, especially when the market environment tells you it's bullish for now. But yeah, we're definitely want to look for buys. Yep. Yeah, good day, Stuart, and good day to you as well, Naomi. Thanks for coming. All right, so with that said, let's move forward. We already know we want to look for buy opportunities on the 1 hour time frame. We can definitely scalp this correction to the downside because that's what we're expecting. But what we want to focus on right now is the day trading opportunity. So, of course, before we do that, before we decide whether or not we really want to trade this pair, with a day trading opportunity, we first want to see if there is something that is called directional confluence. We need to see if multiple time frames support a bias in that particular direction, which is to the upside. We need to see if multiple time frames support that bias. So from here, we're going to jump up to the 4 hour. We can see that the 4 hour is obviously bullish. It's been bullish for a while. So we definitely see that. And if you go to the daily time frame, we see that as bullish as well. But one thing we have to actually take note of is where price is hitting right now. If you look left, we can see that price is actually testing this zone, this area right here, which is a daily area of structure resistance. This is a daily zone. And what makes the zone interesting is that right in the zone, we have this nice wick candle right here. This nice long wick right here, which tells us that sellers could come in once price reaches this particular area. It may come in, pretty soon. Who knows? But what we can assume is that, hey, there's a possibility that price may rotate. We knew that the last time price came into this zone, we saw price give us a nice sell-off for, a few days, a few weeks. We had this correction right here, but then for the most part, price sold off. So we could potentially see the same thing here, but what we can see here is that stochastic is overbought. So we're due for some type of correction on a higher time frame. But what we want to do is trade mainly on the side of momentum. This is what this strategy is all about, exploiting momentum. And if you look at this particular candle right here, we see that we have this nice bullish pin bar with this long tail right here. That tells us that there's buyers right here that, these buyers want to create this continuation move to the upside, and they want to create momentum to the upside. So then who knows? We can actually see a violation or break of this daily structure. So for the most part, what we're going to do is stick to our guns and look for buy opportunities on euro yen. So going back to the 1 hour chart. Going back to the 1 hour chart right here. What we want to do right now is look for a buy at support. We want price to come to an area of support that we will identify, and then from there we'll look for opportunities to buy on bullish confirmation. So then there's multiple things that I'm seeing even on this particular chart. For starters, we have, you know, this area right here. Let me just drop a line right around here, the middle of this first congestion right here, which coincides with the highs of this area right here where there was some balance in the market. So, you know, of course, you know, this level could act as a level of support or structure or some type of demand. But before I do that, what I want to do is drop down to the 15-minute chart and drop down to the 15-minute chart, see if we can see anything else that could support a reason to buy or an area that we can see buyers come in at. And right now, you know, I don't really see too much. We do have this indecision candle, you know, right around that line that we drew in right here. So then this could be an area where, you know, we could potentially see the buyers come in at. But of course, what we're going to do is draw out this zone. We're going to draw out this zone, and I think I'm going to draw it from this low all the way up to right here to this candle right there. So this will be our area of demand or support. We can expect price to rotate somewhere within this zone. So let's just call this 1 hour demand zone. And yeah, so then that's all I see right now on the 15-minute. But yeah, let's go back up to the 1 hour. So then what we want to do is look for an opportunity to buy. And the buyers can come in anywhere within this particular zone. However, as you guys know, we do have zones or an area of invalidation. And in this case, that area will literally be right where this yellow line is. If we see a break and close below this yellow line, then that can signify a potential reversal in price. It doesn't mean that we're going to abort the buy idea, but we can just pause for the short term. So let me just add this as invalidation. This will be our area of invalidation. If price breaks and closes below this zone, then there's a possibility that we could see, you know, price potentially sell off. What we want to do is always look for buys when price is above this invalidation. So then even if price does break below it, if price pops up above it and comes down, retests it, and then continues, then we want to stay on the side of buying. So it's not that we're aborting the buy idea entirely, but you know, we have a level where we want to exercise caution and maybe avoid buying if price breaks and closes below this structure level. So with that said, what I'm going to do is add a few alerts. I'm going to add my first alert right here where we're going to wait for price to come to us, test the zone, and then from there we'll look for buys. So let me actually add that alert now. Let me right click and add alert a little bit above this zone. And you know what we're going to do is, of course, put the date, which is April 24th. And we're going to say price is testing 1 hour demand. Drop down to trigger 3-way pullback. Look to buy on bull confirm. All right. So when price gets to this area, we'll look for a potential buy opportunity on bullish confirmation. Yep. Good morning, Bridget. Thanks for coming. Yep. So then let me also add this invalidation. Let me just place a price alert on this. So what we want to do is have this alert trigger when price crosses below it and when it's a candle close below it. So if we get a 1 hour candle close and break below this level, then that's when we want to exercise some caution. So again, April 24th, let's say break and close below, invalidation, question mark, abort buy, question mark, and yeah. All right, so again, what we want to do is look for a buy. So we're going to wait for price to come to this zone right here, and I know this is a thick arrow. Let me minimize it a little bit. We want price to come into the zone, and then from there we want to look for an opportunity to buy on bullish confirmation. And we could target the highs just to play it safe because we are at the zone of supply or resistance, or at least take partial profits and then shoot for an expanded target to the upside. At least do something like that. But yeah, we'll be looking for a buy opportunity on euro yen once price tests this particular zone. All right. Yeah, good morning, everyone. This is me, Marvin. I just kind of want to briefly come in and just share how, like with these 1 hour day trading setups, you know, it will take some time for these setups to form. Since this is on a 1 hour time frame, we're trading this 1 hour impulse to the upside. We're trading after the retracement of that 1 hour impulse. So then it may take some time. It may even form, you know, completely, or we may get the signal tomorrow. Like, who knows?
Or during the Asian session.
Yeah, or during the Asian session, which would be, you know, technically the next day in Forex terms. But yeah, like we got this 1 hour day trading setup in the euro yen, and even if you look across most of the yen crosses, we can see that they're all moving to the upside. They're all sort of rallying to the upside overnight due to some statements that came out from the new Bank of Japan president, Ueda. You remember he took over from Kuroda, and pretty much he just reassured the markets that he's going to remain ultra accommodative. Like he's not planning on hiking rates anytime soon, but he wants to see inflation get a lot stronger than where it is now in order for them to change their yield curve control. Because what the Bank of Japan has been doing, they've been targeting their 10-year Japanese government bond yields to stay below a certain level. As soon as it gets close to a certain limit or range, they immediately intervene and buy like billions of dollars of Japanese government bonds to keep the yield below 0.5%. So then, as long as they're going to provide stimulus to their economy, that's going to weaken the Japanese yen. So then that's the reason why we see most of the yen crosses like pound yen, Aussie yen, they're all rallying to the upside on yen weakness due to those overnight comments from Ueda. So what you see with the euro yen, this analysis, it can somewhat still be applied to some of the other yen crosses as well.
Yeah. Yep. Exactly. And yeah, before we move on, I just want to make sure you guys, you know, have this. If you guys want to, you could take a screenshot of it, or we can just post it in the chart markup section for you guys, so you guys can be aware of this particular setup. But as Marvin said, a lot of yen pairs are moving to the upside, mainly due to the sell-off in the Japanese yen. So with that said, we're going to look at one more yen pair, and then we're going to shift to maybe another pair. But the next one we're going to look at right now, the next currency pair we're going to look at is the Swiss franc, Japanese yen, CHF JPY. So let's do that right now. Let's move to CHF JPY. Let's go there right quick. And what you'll see something quite similar. As the euro yen, we see this consolidation, and then price broke to the upside. We see that price was in this phase of consolidation, and then we got a break to the upside. So, of course, we want to continue with that momentum to the upside, trading that momentum to the upside. But as we always do, we want to see if there's directional influence. Most likely there is. Drop down or move up to the 4-hour. You can see that the 4-hour is bullish as well. Is bullish just like the 1-hour. And the way this is looking quite bullish. But let's go to the daily. So right now we're looking at the daily chart, and we see that price is very much bullish. And if you look left, we're testing an area of structure as well. Look at this long wick right here, this long wick right here that told us this is where sellers could potentially come in at. So we have to be aware of that. We can't just ignore the wicks. Remember, the wicks tell you the story of price action to some degree. So what we're going to do is just identify this entire zone, and now we know, hey, this is a zone of resistance, of supply. So let me just change the color right quick. Okay, so we have this zone of supply, but we have this strong bullish candle. We can see from the previous day's candle, we had this bullish pin bar candle, just like what we saw on the euro yen, which tells us that buyers are in this area and they want to continue pushing price to the upside. So that can be a clue that we could see this zone broken by its entirety just from looking at this candle right here, because we can see that price tested the zone, corrected, but the buyers came in and said, no, we want to keep this train moving to the upside, keep it moving up. So right now we're testing this area. We're bullish for today, but what we're going to expect is a bullish opportunity or a buy opportunity on a dip in price. So what we're going to do is go down to the 1-hour chart, and we're going to do the same thing we did before. So we look left, we see where is structure right now. Well, we do have hidden structure right here, but I don't know. We can actually see price literally test this candle and then pop up from there. That could very well happen, and you should be aware of that. But what I'm going to do is expect a deeper retracement. I'm going to expect a deeper one because we are at an area of resistance, and we've been moving in this particular direction for a while now. So let me identify where I would look for a setup. So I like to look for areas of commonality. So right here, we see this area acted as resistance here, resistance here, resistance in this area. And we have this congestion, this mini congestion with these 3 indecision candles right here. I don't know if you can see it on your end. We may have to zoom in, but we have, 3 indecision candles right here. So then this is the zone where I think price may want to go. So then what I'm going to do is just identify that for now. Identify this entire zone. So let me just draw that in. So we can start right here, all the way up to the top of this doji candle area right there. So we're going to consider this as our demand zone. And what we want to do is wait for price to come to us and test that particular zone. That is what I would love to see. That's the perfect scenario, perfect case. But as I mentioned before, we do have a hidden internal structure level, right around here. So then there's always the possibility that price may respond to this particular area and push to the upside as well. But what I'm going to do is stay with my first initial bias or decision, and just to wait for price to test this particular area. That's what I'm going to do for Swiss franc Japanese yen. If price corrects all the way down to test this area, then I'll look for a buy on bullish confirmation. We may have some resistance here, and price may actually struggle to break that area, but I'm banking on the fact that we'll see a continuation or move to the upside after that. So of course we're bullish on Swiss franc yen. For the most part, you can ignore all this other stuff I drew in. What we want to do is wait for price to come to us, come into this zone, test this zone as an area of demand, and then look for an opportunity to buy on bullish confirmation. So then that's what we'll be looking for right now. Just look for the buy. As soon as price reaches the zone, just look for the buy. You can just ignore this other stuff. This is what I think is going to happen. So I drew it in for you guys. But for the most part, the main thing you have to pay attention to is the fact that this zone is a zone of demand where we expect the buyers to come in at. Look for opportunities to buy at this particular zone. So yeah, but all right, so then where is invalidation on this one? Well, it's very much similar to what we talked about before. Invalidation for us will be right around here for this setup. It'll be right here. Let's just do it right there. This will be our invalidation zone or level right here. And what we're going to do is add that there. So if price breaks and closes below this level, then we may consider aborting our buy idea. All right. But yeah, this is Swiss franc, Japanese yen. Are there any questions about this particular setup before we move forward? Going once. Going twice. All right. So we don't have any questions about the Swiss franc, Japanese yen, and those are the only two yen pairs I'm going to talk about for today. So moving forward, the next pair we're going to talk about for today, and then after this pair we're going to switch up, and Marvin's going to take over for a little bit, is AUD-CHF, or the Aussie Swiss franc. AUD-CHF. All right. So right now we're looking at Aussie Swiss franc. We're looking at the 1 hour. It's pretty apparent. What you want to do is look for opportunities to sell based on the environment. We're in a bearish environment, right? So you want to look for opportunities to sell. The Swiss franc has been definitely strong, and I think that's the reason why we have this nice move or impulse or expansion to the downside on Aussie Swiss franc, but we want to see if that momentum continues. We could be due to a reversal because we see price slowing down, right around here in this area. We do see price slowing down, which means that, hey, price could be reversing, and, you may want to exploit a counter trend trade. But for the most part, we're bearish. It's pretty obvious price is beneath the 20 simple moving average line or the 20-hour moving average, and we see price action making lower lows and lower highs. So we want to stay on that side of the market. But let's see if there's directional confluence. Let's see if the 4-hour time frame supports a bias to the downside, and it does. I like the way the 4 hours looking. It's a more cleaner setup, actually. So we may see this retracement into this zone right here, which, for the sake of time, I'm just going to draw this in right now. This zone right around here. This zone. And let me just consider this the zone of, we could say 4 hour supply. Right around here. This hesitation, this congestion area right here, or area of indecision. But let's go up to the daily. Does the daily support a bias to the downside? Yes, it does. And do we see anything to the left? Anything to the left? Keep scrolling. Nothing for a while, which means that if we can execute properly and get a nice sell in, there's the possibility we can extend this, trade, and hold it and trail our stop and really get a decent reward to risk from this particular setup, because we see no barrier, below, or no area of strong resistance, or strong support on the daily. So it could be a nice trade. But anyways, going back to the 1 hour chart, what we want to do is look for an opportunity to sell on a pullback in price. And as I mentioned before, there's a possibility that we could see the sellers come in here, which is what I think may happen. In all honesty, I think we may see a deeper retracement into this zone. But let's just say that we're only looking for setups on the 1 hour chart. We need to identify those areas on the 1 hour where we could see the sellers come in as well. And in all honesty, price is somewhat testing that area now. We see right here, let me just zoom in, because I think it'll be better if we just zoom in and talk about it. So we have this nice impulse move right here, but we see here that price has been slowing down. But we could look at this area and we could see that we have this candle right here with this nice wick right here, which means that sellers came in right around here. We have this to the left, we have this hesitation candle, or what some people may consider an order block, or some sort of internal structure, hidden supply. So we can actually see the sellers come in right around here on Aussie Swiss franc. There's that possibility on a 1 hour. This is what we would consider 1 hour supply. But there's a possibility we could see that as well, where price could come into this zone right here, and then we could see a potential sell-off. So, what we want to do is pay attention to both options. If we see a bearish reaction from this level, if we see everything we need to see, number one, we want to see a 3-wave pullback on the 15-minute chart, and number two, we need to see bearish confirmation in the zone. But if we see all of that, then we could prepare for a sell opportunity. So here's what we're going to do. We're going to have two scenarios in play. First scenario is a correction into this zone right here. Let me minimize this. A correction into this zone, and then from there we could see price sell off, and it could be a nice decent sell off, because we just have there's nothing to the left really for a while. So we can see price continue to slide lower for a while. So we may want to trail our stop on this particular setup if this happens this way. But as I mentioned, there's a possibility we could see a deeper retracement as well, a retracement all the way up to this zone as well. So we want to look for the sellers to come in right around here as well. So if that's the case, then we'll look for an opportunity to sell and trade this lower and hold off, because as we know, there's a possibility that we could see a nice deep expansion to the downside. So we definitely want to trail our stop. But there's two areas where we're going to look for the sell setup at. The first zone is right here, and the second zone is up here. This is the second zone of supply. So we just want price to come to us. We're not going to chase the trade. We want the trade to come to us, but when price reaches this zone, we're going to look for bearish confirmation on the 15-minute chart when it comes to this first zone. But if it comes to this second zone, then we may want to look for bearish confirmation on the 1 hour. Who knows? But yeah, this is what we're looking for, guys, this type of setup or opportunity. Now, what will be our invalidation for this one? Well, for this 1 hour one, it's pretty tricky. But as far as sales, we're going to continue to sell until price really breaks above this invalidation up here. We're just going to use this one for now. So right around there. This will be our invalidation area. Probably should have done the middle of this congestion area, because sometimes price likes to come to the middle of it, test the middle. But let me just put this warning label right here, and we could just say invalidation. Look, we'll potentially abort our sell ideas if price breaks and closes above this level. We would need to see a break below it in order to really get back in and consider selling. So I hope that makes sense. But yeah, so then this is what we're looking for Aussie Swiss franc. So yeah, we'll see what happens. So then we have 3 different setups that we're looking at. Euro yen for buy, Swiss franc Japanese yen for a buy, and Aussie Swiss franc for a sell. So just keep your eye on the lookout for those setups. I'll be monitoring them as well. But as I mentioned before, if you want to, you can scalp those corrections. You just have to make sure you see a rotation first on a smaller time frame before you start scalping that move to the downside. That's for Euro yen and Swiss franc yen, and it's vice versa for Aussie Swiss franc. Just look for bullish reversal on a smaller time frame and look for that buy scalp opportunity. But yeah, that's pretty much it. Are there any questions? Because if not, then I'll pass the mic over to Marvin. He's going to talk about what's been happening fundamentally, geopolitically, intermarket wise. And then after that, we may do some top down analysis. We may look at a few. Well, I know I want to definitely look at one pair, but we may also look at the Nasdaq since some of you like trading the Nasdaq, and we may look at gold as well since some of you like trading gold. But all right, guys, that's it. Thank you guys. And I'm going to pass the mic over to Marvin, and he's going to talk about what we've been seeing or hearing lately in the markets when it comes to the macro data and economics. All right. So yeah, I'm going to just, try to discuss briefly because you know, this is a completely, topic that deserves, you could say, its own webinar. But I'm just going to try to give you what you need to know. And because we don't really trade off of fundamental news. Like, we're more responsive traders. We wait for the news to come out, and then as we analyze how the markets move from that news, then we can kind of find that narrative, find the fundamental narrative that's behind that. We don't try to forecast or make predictions ahead of price moves. We just want to understand fundamentals so we can see the reason why price is moving a certain way rather than trying to predict where a price is going. So yeah, for today's session, or really just for this week, this is really a light economic week. There's not really much on the docket in regards to high priority economic data until the second half of the week, or until later this week on Thursday and Friday, when we get US GDP numbers for Q1, or advanced GDP for Q1. But we also get the Fed's preferred inflation gauge, which is personal consumption expenditure data. And all of that would be on Thursday and Friday towards the end of the week. So for these first 3 days of the week, it's going to be interesting because we don't have any macro indicators that may move currencies or move markets in a substantial way. So that means that the market is going to be primarily focused on the headlines, or even on big earnings, big tech earnings, or what's coming out of the earnings data. Now, if we was to go to our heat map, we would see that really right now for this Monday morning, we see stocks sort of selling off. Let me just do this real quick. Let me just go to one of our favorite sites. Let me just try to do this for you guys. Go to one of our favorite sites, which is FinViz, so we can look at the heat map and see what is happening in our futures market. Because our futures market can sort of give us an idea of how Wall Street will open. And as you can see, for this particular Monday, pre-Wall Street session, we can see that our Dow futures, S&P mini futures, Nasdaq futures, even our Russell E-mini futures, they're all trading slightly in negative territory. But you can really see that it hasn't really moved much. If we look at the Nasdaq, it's only about 0.07% below its opening price. And if we look at the S&P 500, which is really our preferred benchmark, because that index has about 500 companies, and it's really reflective of really the broader sentiment in the market. So even with this benchmark, the S&P E-mini 500, or 500 E-minis, like, we could see that it hasn't really moved too far away from its opening range. I don't know if you guys can see it, but it's only about negative 0.09%, or 0.09% below its opening price. So then, although there's a slight reddish tone to these indexes and this heat map, we could still say that it's flat. Like, markets are flat for today, and really the reason why they're flat, for one, it's a Monday morning. People are coming after a weekend, a long weekend where we didn't really get much data per se on the economic front. But I think right now markets are sort of concerned. They're not willing to take any major positions ahead of key GDP data later on this week. But not only that, but we have a slew of our major big tech companies that are going to release their earnings reports this week, starting on Tuesday. So I think, the market is sort of sitting on the sideline. There's a little bit of market malaise ahead of that announcement. And we may see stocks trade within that range like we saw on last week, where most of last week we saw all of our indexes pretty much locked into a confined range. And we also saw something similar with the US dollar as well. The US dollar was locked in a range, and there's really a lot of uncertainty and indecision in the market because there's so many different floating narratives that's on the table, where investors are like, before we take on any risk and place more positions in the market, let's wait for clarity. Let's wait for a catalyst to form to see a breakout of certain ranges, and then we can load up. So then that's kind of what traders are doing. So then for today, it's kind of hard to say whether we're going to open to the upside or downside. At the moment, we're slightly below the opening levels across these stock indices, but we can't say there's risk aversion for today. Even though we do see the VIX moving to the upside, that doesn't mean too much of anything. Of course, we know the VIX is our fear gauge traditionally, but it just simply means that volatility is starting to pick up as we move closer, to the open. Yeah, that's true. It's delayed, by 20 minutes. So then what we could do, we can just look at the charts. You can, yeah, and that's good, Rod, that you mentioned that, because it's delayed by 15 minutes to 20 minutes. I know at one point it used to be 30 minutes, but like with this heat map, yeah, exactly. So we don't use it for scalping. Like normally I just look at the just the futures heat map just to get an overall tone of where markets were and the feel leading up to what we could say the Wall Street Open is. But things could change. The market sentiment, the market dynamic could change between 20 minutes or right ahead of that open.
Yeah.
Wall Street Open.
Yeah, and I just want to say it also depends on what type of scalper you are, because some scalpers do depend on FinViz to have a bias, and they may say, I only want to look for buys because for the day we've seen this currency rally for most of the day. So I
Yeah,
want to stay on that side. I don't want to trade the opposite of that. So they'll look for scalps in that direction of the currency they're trading, if that makes sense.
yeah.
You know,
Like they'll only just pick one side,
only pick one
and if they
side.
see, well, like even though it's delayed and it's lagging, this heat map, like they would say, well, for the broader day, we know that it's been in the red or it's been selling off. So I just want to take shorts until I see the heat map change and then
Or
go long.
yeah.
Whether of course we don't want to trade and rely solely on a lagging indicator that lags like this heat map. But as soon as you see price action confirm in a sense what the heat map is showing, then some people would say, well, I'm just going to choose to trade on a particular side based on what I see in these sentiment indicators. But yeah, you are correct. It's off by about 20 minutes, but you can still use it sort of to get an intraday bias as of now. Of where you know where assets have been trading leading up to it. But I always recommend, if you want to know what instruments are doing, look at the actual ticker, look at the actual index on trading view to sort of get an idea. Because sometimes this can throw you off, and you're thinking that the market is bearish or the tone is bearish, but really we're in the midst of a rotation, since there is that 15 to 20 minute lag with the update. So yeah, but thanks for contributing that. That is true. But as you can see, oil is selling off, continue to sell off. This is interesting because at one point we did see this rally. Well, let me just go to our charts real quick. Okay, let me just go to oil, crude oil, light crude oil, and let me go to the daily chart so we can take a look at this. But you can see that pretty much most of last week, after this tremendous rally, it had rallied about 25% off the lows, and we did see the strong gap to the upside. A lot of this move to the upside was primarily due to those OPEC plus cuts. You remember they was going to cut oil production by, I think, about 1 million barrels per day or 2 million barrels per day. I can't remember the exact number, but that's the reason why we saw oil prices rally to the upside. But right now we're seeing this retracement. We're seeing this pullback, and it closed this gap. It filled this gap, and some of our technical traders were saying, well, like, since oil is getting ready to fill this gap, we could be preparing to start adding longs on oil simply because they feel like, well, once this gap is completely filled, then that may give us an opportunity to go and buy oil. But for me, I like to wait for confirmation. One thing I want to point out is how there's a correlation between what we see with crude oil and what we see in the energy sector in general. So then let me just do this real quick. Let me just put this up. This is light crude oil CL on one side, and let me just put up XLE on the other side, which is our sector S&P spider sector for energy. But let's go to the daily chart, and you can see here, even on the daily chart, that there's some similarities between crude oil and XLE. As you can see, there is this gap. And even though we did see this pullback in crude oil to almost fill the gap, we didn't quite see it in XLE yet. We didn't see the closing or filling of this gap. So there's a possibility that we may see a deeper sell-off, um, even in crude oil. It may sell off, fill the gap, and may come down and test this area down here, and then, rotate higher. But of course, we do have this structure right here that we have to keep in mind. Mel, do you want to say something?
No.
Yeah, we do have this structure right here, and also this structure up here. But yeah, there's still an argument or a case for it to actually sell off a little bit lower based on what we see with energy. And it's kind of hard to say which one leads the other. I typically think that crude oil changes in crude oil prices will lead changes in the energy sector. But as you can see, the sell-off initiated in crude oil, and then we didn't see the sell-off or the rotation in the energy sector until like the following day or following 2 days. That's when we began to see things. So then there's a possibility that we could still see crude oil test this level here and rotate up, and then the XLE catches up, with it, since it's sort of like a day behind almost. But yeah, there's also the argument or case for oil to slide lower and test these levels as well as XLE prepares to close or fill its gap down here. So then, yeah, so then that can happen as well. But for today and for this week, really, like I said before, the market is really focused on earnings data. So then what I want to do right now, I'm going to go back to, okay, let me do this. We're on this heat map right here. We're going to go back to it, but what I want to do, I want to pull up the earnings docket so we can just see, and I'm going to go to, let me just go to Twitter real quick, because I'm going to go to earnings whisper. Some of you guys know that the earnings calendar that I usually post is from earnings whisper. And that's a site, or that's an account that you guys should definitely follow if you do have Twitter. But let me just put this up real quick. Earnings whispers right here. All right, so let's do this. Let's move down to get to the earnings docket that I posted right here, so we can see the earnings for the week and what is coming out that may influence price action until we do get some macro data, major macro data. So then for today, you can see that we did start the session with some data. We had, earnings reports. We had Coca-Cola, Phillips, Credit Suisse came out, and even Washington Trust came out. So then this is the docket for this entire week. But as you can see, the big tech names start on tomorrow. And really, the release of the big tech earnings really marks the halfway point of earnings season. So then, since we don't have any macro data coming out these first 2 days, all eyes are going to be on the earnings releases, just so we can see how the higher interest rates have had an impact on company growth, company revenues, and even to kind of hear what companies would say about their forward guidance. Like, what would be their guidance moving forward? What is pretty much their expectations of growth for the future? So then we're going to be paying attention to that. As Forex traders, we don't really rely heavily on it. We just want the sentiment. We're not going to just read through and dissect every detail of the report unless you're trading options. And even if you're trading options, you don't have to, which we may start. We're going to start some training in options in May. So just keep your ears open for that. We're going to actually restart those trainings again as well. But you can see that for tomorrow after the close, we do have Microsoft, Alphabet. We have a few tech names. We just have a slew of just major companies coming out. And I think we even have Amazon or Meta. I don't know. I can't remember, but there's a lot of big names coming out. So then for this morning, we did have Coca-Cola. What did Coca-Cola come out as? So then let me just do this KO. Let me just type, this is the ticker. KO is a ticker for Coca-Cola. And let's see what did their earnings come out this morning. So we can see here, let me just click on this real quick, that their earnings actually beat to the upside. You can see that their bottom line came in better. Their earnings per share, the bottom line came in at 68 cents per share when the estimate was for 65. And we can see revenue, or the top line, come in better than expected also. So then we should have saw a spike in Coca-Cola. Let me just do this real quick and go to Coca-Cola real quick. And I'm not going to keep you guys on here for, for too long. I know you guys are interested in seeing setups, and I'll be passing the mic back over to Melvin soon. But let's see what Coca-Cola is doing. Let's just go to KO real quick. And we can see that, look at this. Like, yeah, this is daily, but look at the pre-market. It's already at 65.12. So then let me see how much of a percentage move that is. Now this is Friday's close right here at $64.05. But let's see how high it is. So it spiked in the pre-market. It's up about 1.6% in the pre-market. So it's expected to gap higher on that good earnings data. You can see all of them performed to the upside. So could this also help to foster positive risk sentiment moving into the Wall Street session? And only time will tell. I know this is Coca-Cola. There's a few other companies. I think we did have Phillips. I can't remember the name for that. Is it PHG? I think it's is it PhD? I can't remember. Let me just do this right here. Philip.
No, you're wrong.
No, I think it's PHG. It has to be PHG. No, I'm talking about the ticker. The ticker, I think it's PHG. Let's see, we'll see. But no, I don't know. I don't think so. But let's go back to okay, let's go back to our earnings, earnings whisper right here, and I thought it was PhD. I can't remember. It, yeah, it is PhD. We didn't get anything. I don't think we got anything. Hmm. Yep, Phillips is PhD, just like I thought. But okay, yeah. But right here, they do got their earnings data. I didn't see it on the actual chart, but we could see that their earnings came in, sales. This is, since it's a European-based company, we could see that their sales came in better than anticipated. Um, their adjusted EBITDA, which we don't really look at too much if you're trading stocks. Um, and you're trying to look for good companies to invest, you were looking at. But that came at euro 359 million, which is better than what they estimated. So then we should see that stock also move to the upside. So then we saw Coca-Cola come out better than expected. Phillips came out better than expected in the midst of rising interest rate environment. So we're not seeing the rising interest rates really crush demand or harm company growth. So could this mean that the Fed and other central banks around the globe would have to do more to sort of help slow things down in order to deal with inflation? So that it's kind of hard to say. Either they can trade positively on this good news or they can trade negatively. Are we in that environment where good news is bad news? Or will good news be good news just in the stock sector and we'll see stocks rally to the upside? But for now, we don't pretty much try to forecast or try to make sense of it. We just trade what we see. But we do see that both companies came out with better than expected data, which means that companies are doing well in the midst of a rising high interest rate environment. So yeah. But let me just go back to FinViz real quick and let's just go quickly through this heat map. Because I know Melvin is wants to get back on here.
No.
Yeah, he's he's telling me to hurry up and close it out. But yeah, you can see here in this Forex heat map, we got this currency spectrum. You see that the strongest currency for the session is Swiss franc, followed by the euro and then the Kiwi. The euro and Swiss franc have been really doing very well. Typically, simply because for one, we've had a warmer winter than usual. The winter, or this ideal of having a cold, bad winter, we didn't get that this year. The winter has actually been good and it hasn't been that bad. So then some of the issues dealing with energy in Europe, we didn't see that come into play as the winter months came in. So then the companies in the eurozone have been doing pretty well, especially in the services sector. But also how they handled the Credit Suisse debacle with the Swiss National Bank, how they handled that is also helping these European currencies stay supported and stay elevated. But you still see also in ECB president, Christine Lagarde saying that they're going to still hike and tighten. So then we know that the Swiss franc, the euro are the strongest, followed by the Kiwi or the New Zealand dollar. And the weakest currency for today is the Japanese yen. Just like I said, from comments from Bank of Japan, Ueda, about them wanting inflation to go higher. And they're still going to add stimulus to their economy. So then that's the weakest currency for today, followed by the Aussie, and then the US dollar sort of neutral or balanced or trading within a tight range. But yeah, that's with that. Let's see crypto, and we see this with cryptos. We see Ripple is sort of selling off the most, followed by Bitcoin and Bitcoin Cash. So yeah, so really the sentiment is sort of still tentative. This is a Monday morning, and this could be just that Monday morning sentiment since liquidity levels aren't as elevated as, how they will be later on in the week. People are coming off of the weekend, and there's not really a catalyst yet to send prices in either direction. So just, scalp when you do see a setup, go in, go out. But for those day trading opportunities that my brother did point out, you can wait for it to get to those levels as well. And also, trade those on confirmation as well. So yeah, so that's pretty much it. There's really not much on the docket, but Canadian housing data, that's not going to, help move U.S. markets. But But yeah, that's pretty much it. So let me just go back to trading view, and I would definitely have Melvin take over for the rest of today's session. Let me just do this real quick. Let me close this. Yeah, I think yeah, I think that well, never mind. All right. So I guess we could look at these charts now. Yeah, there was actually a setup that I think maybe potentially forming now. Um but yeah, let's go to it. This is the US dollar CAD. We may be a little bit late right now, but we'll see if we can get in. All right. So right here we see that price was bearish, came down, hit this area of support right here, daily structure support. And then from here we had a bounce to the upside to retest the previous highs. So when that happens, what type of pattern does that form? And what should we possibly expect? Whenever you see something like that happen, where, let me just draw it in, price goes all the way up, down, and then price goes all the way up to retest that same area. What is that called? For those who are familiar. Yep. Naomi said it, a V bottom. Exactly. So whenever you see a V bottom, there's always the possibility. It doesn't mean it happens all the time, but there's always a possibility you'll afterwards see the retracement, and then you'll see another impulse, thus creating the infamous inverted head and shoulders setup. So that is something that we can maybe look towards. Of course, this is the daily time frame, and what we could see and what we do know based on what we observe is that price is testing an area of structure. Look left, structure leaves clues. For a while now, this zone has acted as an area of important structure right here in this zone, in this area, on multiple occasions. So we have to rely on that. We see this long wick right here, and then recently with this right there. So then this area is a key critical area that we definitely have to pay attention to. So what we're going to do right now is look for a potential opportunity to sell, because bias is to the downside. Even though it did break through like an invalidation, we see price break the structure area, so we most likely will see something like this possibly happen. But what we want to do is trade this move to the downside. Remember, this is the daily chart, and we want to look for that opportunity. We see price testing structure, came where the sellers were right here. We could tell where the sellers are by looking at this wick right here. Price looks like it wants to sell off. But anyways, let's drop down to the 4-hour chart. All right. So right now on the 4-hour chart, we can see that price is testing an area of supply. And let me also do this, because might as well do this. Let me expand this out. And let me do this. Price is testing this area of 4-hour supply. Yeah, let me just do this. 4-hour supply as well. And we could see from here, let me ask you guys this question. Based on what we see right here with these last few candles on the 4-hour, are they moving up? Are they moving down? Or are they moving sideways? Just look at this price action within this zone pretty much. And I don't want to insult your intelligence. I'm pretty sure you guys know. Based on what we see, it's obvious that these candles are moving what? Sideways, right? Yep, exactly, Adam, sideways. So what we could assume here is that price is in the midst of a potential reversal or consolidation. That's what we can assume, but we may see that a little bit better on a smaller time frame. So let's zoom out and let's look for that opportunity, because we see that stochastics is overbought, and the last time it was overbought and it was in this zone was right around here. We can see that stochastics was coming from overbought territory, and then it just fell off for a while. So we may see a nice strong sell-off, at least to this area right here, before we see some demand kick in. So of course, let me just call this 4-hour demand or something. Well, it's not really demand, but it's an area where we could see the buyers come in at. even right here, there's congestion even before that. But anyways, what we're going to do is drop down to the 1 hour. We're going to see if we can identify an opportunity. We may be a little bit too late. So let's see. Okay. So yeah, this is the reason why I was rushing Marvin, because, you know, I knew I was seeing something take place. So then right here, we saw this double top, this topping pattern. Price then broke to the downside, even though if you really want to make sure that price is truly reversing, you'll look for price to break this low right here. This will be the low that you'll look for price to break. However, we may be able to get an expansion to this area before price actually retests the highs again. So then this is what I think is going to happen. I think price is going to come down, test this zone, and then come back up, test these highs again like this, and then start falling. That is what I think is going to happen. Why? Because I've looked at these charts many times, and you know, I could sort of get a feel for how price action may occur. But what we should expect is a sell-off down into this zone. So what I'm going to do, I'm going to take my arrow and I'm going to take it from this high, from this left top, all the way down to what could be the neckline. And I'm just going to drag it right here. So we can potentially see price come test this level, this area right here. We could probably expand it out a little bit more, at least down maybe to this body close right here of this candle to the left. So I'm thinking we're going to see a sell-off right here. So then let's drop down to the trigger time frame to see if we can potentially get in. Let's go down to the 10-minute. Okay, so right here, we're looking at the 10-minute. Let me ask you guys a question to see if you guys can see it. We want to see a three-wave correction to the upside before we see the sell-off. In other words, we want to see a leg A, a leg B, and a leg C, and then eventually a sell-off to the downside. Now, let me ask you guys this question. On this setup on US dollar CAD, do we see that three-wave pullback? Yes or no? Do we see that three-wave correction to the upside?
To the upside or downside?
To the upside. Well, yes, we do. We have a leg A, leg B, and a leg C. And now price is starting to expand and break to the downside and even break this particular area right here. So, you know, what we can potentially do right now is look for a possible opportunity to sell US dollar CAD down into this zone or to this area right here. So in this case, you'll just simply wait for this candle to break. Let me, or you know, to break and close below this low. And then from there, you can look for your opportunity to sell. So let me see how this looks on a 5-minute, because it may be better on a 5-minute. Yep, it is somewhat better. We already do see the break and close on a 5-minute. But yeah, I'm going to wait to see if we can get a pullback up here to this area of structure. Let me just draw it in right into this area of structure right around here. I'm going to wait for price to come to me and touch this particular area before I decide to get involved. But what we can do is simply wait for price to come to us, and then from there enter the sell, and we could close out right around here. just to play it safe, or just close out at the lows. Yeah, but yeah, this is US dollar CAD. Yeah, so yeah, hopefully we'll get something like that. And what I'm going to do is add an alert right here, just in case we do get that pullback. We may not get it though, and that's the thing. Sometimes it may be best just to enter in immediately. Like we probably could have entered in immediately, jump right in, and then you know ride the momentum and absorb any potential drawdown if price was to pull back. But in this case, it just seems like momentum's to the downside and it wants to continue. So, we'll see. But yeah, we're going to wait for a pullback in price. So again, we'll wait for price to pull back to this zone, and then from there look for a sell opportunity. All right. But yeah, that's the US dollar CAD. Are there any questions with that setup before we move forward? Going once, going twice. We'll come back to visit this one before we end today's session. But let's go to another pair. For the sake of time, I'm not going to do some of the ones that I have on my list, some of the good ones. But I know some of you guys love trading gold. So then what we're going to do is go there right now. Just go to XAU USD. And we're going to start at the daily time frame. All right. So right now we're looking at gold. We're currently on the daily time frame. And what we can see here is a slowdown in momentum. We saw price push up strongly for a number of days, and then that move to the upside started to taper off. Let me just describe it. So in other words, we saw this nice expansion to the upside, and then all of a sudden price started to taper off. It kept moving high, but the momentum to the upside has been waning, and it's tapering off, which means that we're due for a nice reversal or correction on the daily chart. But if you look at this particular asset right now, what we can see here is that we do have this ascending trend line right here, and really is forming what others and what me would call a rising channel. So let me just clone this line and let me bring this right here. So we have this channel that is forming right now, and we can see that every time price hits this channel, it creates this wick and it pushes up. But I guess we can expect something like that to potentially happen, because this is an area of daily structure or support right here in this zone. Well, yeah, price didn't really touch it yet, but this is an area of daily structure that we definitely have to pay attention to, on our chart. But for the most part, if you look at the past few trading days, gold has mainly been trapped in a range consolidation ever since Monday. Like last week was a week of consolidation. That's all it was. That's why it was a pretty difficult trading environment if you didn't know what you was doing. But we could see all these sideways candles. Gold didn't even move in a particular direction. It just moved sideways for the whole week. So what you could do is just define the range. You could say, okay, we have a low right here, and and you can always change the color. And we have highs right here at these wicks. You can just take it at the wicks, because you know that there's a possibility that sellers can come here and buyers can come down here. So we definitely want to identify and draw that in. But yeah, let's zoom out and let's drop down to a smaller time frame. Let's go to the 4-hour. All right. So right now we're looking at the 4-hour chart of gold, and we can see here that price has been consolidating or accumulating potential buy orders at this support. So then there's a possibility we could see price rebound and test these highs again and maintain that range or consolidation. There's that possibility. So then this is what you can do. You can either play the range on gold or wait for the breakout. It's up to you. You can play this range whenever price gets to the lows, because the order flow overall has been to the upside. But right around here, when it gets to the lows, look for opportunities to buy. But when it gets to the sell, wait for that bearish reversal and bearish confirmation, and then trade it back down here, and then look for opportunities to go long, and then short at the extremes or edges of that range. That's what you want to do, especially in this environment. Or you can just simply wait for price to break out either to the downside or to the upside right here. But that can take some time with gold. But I would just say, for now, play the range. So we have this expansion lower on the 4-hour into this zone of structure support. And the stochastic is near oversold. It's not oversold yet. So then what we can do is go to the 1-hour chart and see if we see signs of reversal on the 1-hour. And right now, things are still in a period of consolidation. We don't know for certain if the buyers are going to take control until price really breaks this high right here. But until then, you can either sit on your hands or just take the risk and look to buy. We are at this zone. So, we may get something like this where price retests this low. And then when that happens, this becomes the new high. This becomes the new high that price will have to break. And then we'll just simply wait for price to break that high, pull back, and then boom. So, yeah. But that's with gold. All right. Yeah. Are there any questions before we call it quits for today? I think I'm going to probably end, unless you guys want me to do the NASDAQ. It's up to you. For gold, just look to play the range. NASDAQ, we may see something similar. But do you guys want me to go over the NASDAQ? I can do that now if you want me to, do some top-down analysis. Or we can just call it quits and then just move on. It's up to you. I'll let that be your decision. Okay, Bridget said, please. Okay, so yeah, we'll talk about it right now. So then we're just going to go to the US 100. For one, let's go to the daily chart. And let's go to US 100, which is the NASDAQ. All right. All right, so yeah, this one was quite similar as well to gold. All these assets were moving in a tight range on last week. We have the highs right here, the lows right here, but it was a tight range. But with the way things are looking now, we could see price continue its rally to the upside because the overall order flow has been bullish on the daily. Bullish order flow on the daily, bullish order flow on the weekly. It's just been bullish. So, of course, you always want to stay on that side. I believe that's the reason why Marcus loves buy scalps over sell scalps. Because even with scalping, oftentimes you want to trade or scalp in the direction of the higher time frame order flow. So that's the reason why he does better buying with buy scalps on the NASDAQ than he does with selling. But in either case, you can trade both sides of the market, but the order flow is to the upside. So buyers still somewhat could say that we're still running the game on the NASDAQ. We're still somewhat trying to maintain some control, and we have reasons to believe that. But anyways, let's move on. So we see that price has been in this nice, tough daily consolidation. So then this is daily structure support. And we definitely have daily structure resistance right up here. Daily structure resistance. And we can see that price has been really moving back and forth between these two. Between these two levels or zones for days. So anyways, let's drop up or, jump down to the smaller time frame because I believe we're going to see another retest of these highs. That's what I think is going to happen. It seems like price tested this area where the wicks are right here. We see wicks galore right here. As a matter of fact, let me just circle it. Wicks right here where the buyers came in at. Wick right here where the buyers came in at. And we could be seeing that again. We see a wick within that same vicinity, within that same area. And even though this candle hasn't closed yet, but we could see buyers come in and help push price higher. So what we want to do is of course, look for potential buys, but we're not going to be foolish with it. We're going to use discretion. So let me drop down to the 4-hour first. All right, so this is the 4-hour chart, and we see that price has mainly been consolidating, but I like what I'm seeing, because whenever you see something like this, what we call a three-way pullback, then expect to move to the upside. And in this case, or expect a reversal. And in this case, we do see it. We see a leg A, leg B, and a leg C. So we can sort of expect a potential retest of this high right here. That's what I'm banking on for the NASDAQ. A bullish day. Of course, I could be wrong, but I'm going to bank on us having a bullish day today. So if you're going to participate on the NASDAQ, look for buy scaps. Look for opportunities to scalp the NASDAQ to the upside, because I think that's what's going to happen. I think that's what we could be potentially seeing. And if you drop down to the 1-hour chart, we can see this accumulation a little bit better. But yeah, I definitely have to change some of these levels. Yeah, but yeah, that's pretty much it, guys. I guess that's it. Look for opportunities to buy, scalp, or to buy the NASDAQ, and see how that goes for today. But that's pretty much it. I don't have really that much more to share with you. Bear in mind, we do have a potential trendline support area right around here. So we may need to see price break that before we're confident in the bullish reversal. But for the most part, I think we're fine. And if you look for buys on the NASDAQ, you should be cool. But if you see something interesting happening, like a price breaking below a zone of structure to the downside, then consider the possibility of a reversal, and for sales to come into the market. Sell opportunities to play out. All right. So that's it, guys. Thank you guys so much for coming to today's session. We really do appreciate you guys. For some reason, I felt a little bit tired this morning. Like, I know for me, I definitely need to get some sleep. I had a busy weekend, but hope you guys are all rested and prepared for this next upcoming week of trading. And until we meet again, I hope you guys have a wonderful day of trading. God bless you all, and we'll definitely talk to you guys and see you guys within the private chat and main chat. I wasn't that involved last week in the chat group because I was just busy handling other stuff, but this week I expect to be more involved. So if you guys have any questions about anything, just please let us know. We're more than willing to help you in any way that we can. But thanks again. Have a wonderful, blessed rest of your day. And remember to always count your blessings, not your pips. And we'll definitely see you soon. All right. Talk to you later. All right. Goodbye.